All right. I hope everyone is having a good weekend. Doing a little weekend video update on the markets, and so let's dive right in. Right now, I've got the Bitcoin chart up in front of us. This is a weekly, and just trying to get a little bit of an update on this Elliott wave count that I've been tracking, and not a whole lot of change since the update last week. Still yet to close this weekly, but as of right now, my interpretation of this count is as long as this area holds here, we could have our minor 2 in moving for our next move, our most powerful move of this entire 5 impulse in front of us. And so the invalidation of this count would be, weekly close below 24,799. That would have me more thinking that, this is 1 and this is the major 2, and would just have to redraw that count. But as of right now, until invalidated, this is my interpretation. Next up, let's look at another version of the Bitcoin chart for a little bit of a different way to look at things, right? And I posted this on my Twitter feed yesterday, and I see a lot of calls for, we're heading back down to 20, we're headed back down to 10, unsure of where this is going, and the potential for accumulation to be going on for the next year or so. Whereas my interpretation is a little bit different, right? I've got, again, this is the weekly Coinbase chart in front of us. This count is very similar to the count I just shared on a macro scale, and I point your attention to the cycle as I have it, right, starting back in 2019, yet to conclude, being just its own unique cycle and having its own unique signature. And what do I mean by that, right? Well, in this cycle, we had a nice impulse, and then a correction, which turned into, a massive accumulation event, and then an impulse into 3, a correction that concluded with another massive accumulation event. And if we look at the Wyckoff schematic for what potential accumulations look like, they are really similar to me, right? I mean, so if we've got, let's just overlay this and see what that looks like. We've got a pretty similar structure there. And I'll kind of go through a little bit more detail. And we've got fairly similar structure there as well. And what are these accumulation structures? What are their hallmarks, right? Well, the hallmarks of accumulation structures are they're very difficult to tell whether you're in an accumulation structure, and they can trick you into thinking you're in distribution. But generally speaking, the market's coming in from a position of weakness, and then you get your first bounce, and then you get some range action, you get a fake out kind of above, like we kind of saw in this area, where the participants think, all right, that this is going to be a V-shaped recovery. And in fact, it goes the complete opposite way down. If we're kind of looking back to December 2019, we saw that pattern in the market, right? And then we get a reversal after we take out those equal lows, which we did back here, and again, December, run it back to the range high again, not quite as high as it was before, make a reversal, and then you really get capitulation. And that's what this spring test region refers to. Certainly saw that on the March 2020 lows. Spring, and the hallmark of a spring is you're out of this entire accumulation range and you're back in it. You want to see good volume. Let me pop volume up really quickly. And we sure did see that volume here, right? We saw that volume at the COVID lows. And then we get this testing structure, which we saw beautifully here, April 2020, back inside of this accumulation range. And then it makes its move towards the top of this accumulation range. You have this LPS structure. And then we break out of the entire accumulation range and form this BU, LPS, SOS region depicted on the chart, which very similarly we see here in this region as well in the summer of 2020. Break out of this accumulation structure, you get a bit of a retest of the top of it, and then move into phase E, which is expansion. Now let's take a look at what we've been doing since last June, right? Same type of movement. Markets coming in from a position of weakness, straight down, right? Straight down. Then we get a reaction, and then we get the forming of a range. This AR could be drawn right in this region, and then we get a kind of a retest towards the bottom of the range, not quite there, and then moving around a little bit, and then you get the ST in phase B, where you kind of take out these lows. Didn't quite do that there, but very similar. And then finally, we get this spring event, right? And the spring event, FTX marked the spring event, coming back out of the spring, same type of LPS structure as we see here. And then out of the entire accumulation range, which we are right now, mind you, and some type of consolidation retests going on prior to expansion. So in my mind, the structures remain bullish. To me, accumulation has ended by simply looking at this chart and simply looking at this structure. I could absolutely be wrong, but again, if we look at the relative strength index is kind of giving us the same signature, right? We had this rounding bottom, cup and handle, and then we had a breakout. We had this long, prolonged rounding bottom. We've got a bottom. We've got this long handle. We've got some hidden bullish divergence forming here on the weekly, right? If we look at higher lows, we got lower lows. So that is a point for the bulls in my book. All right, next up, let's look at something that I posted today, actually, on Twitter. And this just this goes to the overall theme, if you guys have been following me, right? The day-to-day ticks of what we're going to do are not the easiest to predict, but when we look at overall trends, and specifically looking at what the dollar has done, this is DXY, the dollar, and we've got Bitcoin above. Since Bitcoin's inception, we see a lot of correlations, and they are inverse in structure and in manner. And what do I mean by that, right? We've got, going back to the inception of Bitcoin, the dollar was in a downtrend, clear downtrend. Bitcoin went parabolic. This trend starts to change. And what happens? This trend starts to change. Bitcoin tops out, and the dollar starts to kind of go parabolic out of its downtrend. Not coincidentally, Bitcoin bottoms in that area, kind of break this parabola structure, and Bitcoin seems to be, having gone through accumulation and breaks out of accumulation, right? No big surprise. The dollar kind of goes sideways for a little period of time, and then starts to change its trend again, right? Trend change in this area, downward trend. And I'll draw that a little bit better. And what happens to Bitcoin? Well, we can see above, Bitcoin goes parabolic, right? And then we see the dollar, come back and break this downtrend, go parabolic. And what does Bitcoin do? Bitcoin goes into a prolonged deep correction. It's the bottom of that, the climax of that correction, not coincidentally coincided with the parabolic blow off in the dollar. And we get a prolonged period of sideways consolidation in the dollar. Bitcoin starts to come out of that correction and accumulation, and this structure breaks. This accumulation type of structure breaks, not coincidentally, when the dollar has one more relief bounce, reversal, initiates its downtrend, and this is when Bitcoin goes parabolic. So again, a lot of coincidences here, not guaranteed, not a guarantee of what's going to happen in the future, but certainly informing the probabilities. And then we've got the dollar, and obviously that clear downtrend as Bitcoin goes parabolic, breaks that downtrend and comes out of it, and that's when Bitcoin undergoes its major correction. The climax of that correction is marked by the climax of the dollar's rate of change increase, and then we have a prolonged period of sideways movement on the dollar. Bitcoin going through its accumulation structure, major correction, as the dollar peaks again, right? Peaks here, kind of this is a distribution, right? This is a distribution. This is a spring event in a distribution, right? That as I showed you earlier in the last chart, spring events and accumulations are going to kind of fake out people to the downside prior to making their directional move, and springs and distributions do the same thing. Spring, and then downtrend. Spring, correction, V-shaped recovery, comes out of the downtrend and goes parabolic. And then we've got the downtrend that's broken. In April of 2021, Bitcoin peaks out, dollar starts to go parabolic. Surprisingly, Bitcoin has a correction that somehow gets to all-time high, but this was a corrective move in my mind. And the dollar's parabola was broken, marking the region where Bitcoin eventually bottomed. Okay, so now we've got this period of sideways consolidation in a downtrend kind of structure, and this last little relief bounce on the dollar, I wouldn't be surprised if it was this little spring type of fake out prior to resumption of this trend down. Not surprisingly, kind of coinciding where Bitcoin is on the high time frame chart. Would not be shocked if this marked the V shape. What do we do every time we were, out of this accumulation structure, we ran to the top, and broke to new all-time highs. All right, what's next? Let's just look at the dollar specifically. And I know this one has been confusing to a lot of people, myself included. Okay, why do I say myself included? Because I just didn't see the correction coming up as high as it has, right? So if we just draw a line, this is a clear downtrend. The dollar has broken this local downtrend, folks. Okay, but what it hasn't done, let's think about what it hasn't done. Is it is still in a structural downtrend. Why do I say that? This is a lower high, right? Talk to me when we get a weekly close above this range, above this blue line. This is a lower high, lower high, lower high, lower high, lower lows, lower lows, lower lows. Structurally, we're still in a downtrend. Let's take a look at the 50 and the 200-day moving average, simple moving average. So we've got the 50 still pointed down. We've got the 200s trying to make a little bit of a curl up here, right? But we still have this death cross back here. And in this, to me, trumps everything, okay? We had a death cross back here. We had a death cross back here. We had one back here that eventually did get reversed. But you've got to show me that reversal, right? You've got to show me that reversal. And it's not to say that that can't happen, but for right now, this trend is down. We're under that 50. We're under this macro range, weekly range resistance going all the way back to 2016. And so not to say that we couldn't get even more of a fake out up here prior to resumption down, but that's just the way that that I am reading the dollar right now. Next up, let's look at the Dow Jones. And this is a weekly chart of the Dow Jones, and again, just looks constructive. This is the 30-week moving average, and you know we've got a massive flag we broke out of. We retested it. We've got the 30-week moving average kind of acting as support down here. Haven't even tested it. To me, this structure just continues to look constructive for continued upside. Given the action last week, I'm leaning towards this week being a very big week in markets. I really am. Let me go to yet another chart to kind of illustrate that idea. Let's see. How do I get rid of this? All right. All right, let's look at SPY. And so this is a SPY weekly chart. This is the count that I had in place for a couple of weeks. 4 came back a little bit deeper than I expected. I think I had it initially around there. But the good news to me is, you know, this EMA 20 is holding, right? And that's telling us a story. Let's clear those EMAs and take a look at the simple moving averages. I'm going to put them all up here, folks, because I think this is important to tell us what's going on overall with this trend, right? Fake outs, reversals in downtrends, right? When these moving averages, these long-term moving averages are pointed down, that's when I want to be wary of fake outs, right? So this candle, fake out. This candle, fake out. These moving averages are pointed down. We've got our basing structure consolidation, and since March, these moving averages have been pointing up. Okay, folks, these are upwards pointing, upwards sloping moving averages. And let's just go back to check out the impact of that, right? Upward sloping moving averages, clear uptrends. Upward sloping moving averages, clear uptrends. Upward sloping moving averages, clear uptrends. So until proven otherwise, we are in an uptrend. And given what we've seen with the put to call ratio over the last week, we were at levels. We were at these levels, at March levels, in terms of put to call ratio. The McClellan oscillator again was almost as oversold or more oversold than it's been in several months. And those things aren't any indicator of what's going to happen, but they do inform probabilities. And when you've got things like the put to call ratio as elevated as they were, and those oscillators as oversold as they were, the majority of the time, greater than the majority of the time, the markets a month after those moments are at least 4% higher. And so my expectation here, again, is that 4 is in or close to being in, and we're going to resume, and the next stop is all-time highs in the SPY and in all the markets that we're looking at. All right, next let's look at ETH. I know I got a lot of requests to cover ETH, and sometimes I miss those requests, but not today. Again, not much has changed with the structure, right? I mean, we've got a situation where this is the weekly chart. You've got just a clear type of macro high time frame pattern emerging, similar to what we saw from 2018 to August 2020, right? This V, Adam and Eve, double bottom. Back in September, we flagged over it, kind of retested this breakout structure. We're kind of flagging over it, this cup and handle, and a little bit below this retest structure. So I'm sure that's not giving a lot of people comfort. And those that are trading 30-week moving averages. Let's just say, let me take a look at the 30-week. Bitcoin and ETH both breached that last week, so or 2 weeks ago, whenever it was. So not a shocker that the market sold off. You know, in the short term, traders are going to most certainly have a impact on price, but over the long term, in my opinion, this macro structure is telling us that accumulation is almost over, and the next phase of this market is expansion. Okay. Move to some of the miners. I'm going to look at Mara, and then I'm going to look at MicroStrategy. Now with Mara, you know, the miners in MicroStrategy are very telling to me. They seem to sniff out before major moves are happen and sniff out after they happen, right? And so if we look at Mara's weekly, we've got we close right here on that 30-week, right? And the structure is eerily similar to the one we saw back in March 2020 in terms of its 5-wave, 2, 3, 4, 5-wave impulse. This is a signature of a 2, right? Of a macro 2 where everyone thinks it's over. I mean, this thing sold off from almost 20 down to 10, right? Almost 50%. A haircut in 1, 2, 3, 4, 5, 6 weeks. Similar type of move we made over here, 489 back to 159. So more than 50%, where the market thinks it's over, and then with the force that it came in, comes out with even greater force. And so the setup to me is very similar. Again, not that history is going to guarantee what's going to happen in the future, but right here, the miners look really good to me. And a similar type of move that we saw in Mara in 2021 could get us north of 434. Wouldn't surprise me at all in the resolution of this move. Let's look at MicroStrategy. And again, a lot more clarity in a name like this. You know, we're holding the 30-week, we're holding the cloud, and again, just volatility in a strong uptrend. What you'd expect to see preceding exponential type of runs, right? Exponentiality is not going to be a road that's easy to travel and very predictable and easy to stomach. And MicroStrategy is showing us that. However, the structure is bullish, right? How else can you describe, what more do we want in a structure where you've got a series of new higher highs, higher lows, higher highs, higher lows, higher highs, and now we're forming a higher low, right? Again, the key to these structures to me are, and us being in a clear uptrend, are these higher highs and these higher lows. Now, if we break below 250 on a weekly basis and close, then I'm open to looking at these markets a little bit differently. But until then, I see nothing but a clear uptrend with volatility along the way. I think that that's going to about do the video. I hope you guys enjoyed the content. Have a great rest of the weekend. Look forward to doing another one of these next week, when I think we're going to be we're going to have some real updates. Let's put it that way, given the setups that are emerging and in front of us. I look forward to that one. So take care.